Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, hotels in the capital have seen record double-digit revenue growth in occupancy rates for the first 7 months of the year, with Indians topping the list of visitors. According to figures released by the Abu Dhabi Tourism and Culture Authority, guest arrivals topped the 1.5 million mark, a 10% increase on the same period last year. Year-to-date, hotel revenues have risen by 16% to almost 3 billion dirhams, with food and beverage accounting for 1.17 billion dirhams. And there are currently 146 hotels, offering 25,300 rooms in the capital, up from 137 properties last year. Arrivals saw almost 4.8 million guest nights, up 23% on 2012. India is now Abu Dhabi's top overseas source market for hotel guests, with some 92,529 Indians checking into the Emirates accommodation this year, a 21% rise since last year, while the second is the UK, followed by Germany. Aradi Developments, a joint venture between DR Development and Dubai Properties Group, has announced the launch of its 48-storey residential tower, a part of the Central Park project at the Dubai International Financial Centre. The tower is nearly 80% complete and is spread across nearly 575,000 square feet, boasting 426 apartments. These include studios, 1- and 2-bedroom apartments, as well as 2- and 3-bedroom duplex and triplex penthouses. According to a company statement, the tower features next-generation premium high-rise living, including ultra-modern facilities, such as a podium-level landscaped courtyard, swimming pools, as well as exclusive shopping and dining outlets. Arif Mubarak, the CEO at Aradi Developments, was quoted as saying that Central Park has been launched at an opportune time, when Dubai is experiencing growth and has proven its status as one of the most profitable locations for investment. The handover of the residential tower is scheduled for the second half of 2014, with sales expected to begin mid-September. In the past few years, regional investor trends in the forex and commodities markets have undergone a radical change, which has created a significant demand for education in trading. That's according to experts. In 2004, around 70% of traders were institutional and 30% were individuals. By 2010, this was then reversed, when 70% of trade was conducted by individuals rather than institutions. Off the back of this, the Alpari Academy is looking to redefine online trading education across the MENA region and support this rise in online trading with additional support from the Dubai Gold and Commodities Exchange.
There's been a number of reasons for the surge in online trading. It started really with the popularity of equity markets in the region, DFM, ADSM, as well as equity markets on a regional level. That's helped create an interest in alternative products to trade. FX and commodities used to be considered a hedging tool. Today they're considered an asset class within itself. And that was also introduced into client portfolios in the region. Second to that, we've had technology growing on a very, very fast, at a very, very large scale over the course of the last decade. It's been able to facilitate online trading through iPads, through telephones, through desktops. Basically, a trader is able to access his platform anywhere at any time. And most importantly also, it's been supported by the development of the Dubai Gold and Commodity Exchange in 2006. That was the first derivative exchange in the region, and its popularity has been witnessed by recording record growth month on month, specifically on the Indian rupee contracts, supported by the gold contracts as well.
The US dollar made significant gains in trading last week following a host of strong US data, headlined by second quarter US GDP, which came in at 2.5%, well above expectations of 2.2%. The growth figures were further complemented by a stronger Chicago PMI reading, a strong University of Michigan consumer confidence figure, and improving US consumer confidence. Well, we earlier spoke with Gaurav Kashyap, the head of futures at Alpari Middle East, for his view.
Well, Laura, volatility is certain to remain in the week ahead. All eyes are going to be on the U.S. non-farm payroll report, which is expected out on Friday. Now, expectations are for the figure to come in at 175,000 new jobs added during August. This is going to be building on some of the lower numbers that we saw in July after a very stellar reading in June. The unemployment rate is expected to be at 7.4%. We could see a bit of a drop in that figure as well, but once again, that'll be as a result of a decreasing labor participation rate. Overall, this is going to be the last major piece of the puzzle for the FOMC before they convene on September 18th and 19th to confirm their plans of the taper. Now, of course, market sentiment has been driven over the past few months about the timing of when the FOMC will be tapering and cutting anywhere from 20 to 25 billion per month from their existing 85 billion per month plan. Now, this Friday's report will be key in establishing if that will happen in September. So once again, a better than expected US non-farm payroll report will increase speculation that the Fed will look at tapering as early as September, and this will see a lot of flows coming into the US dollar with higher yielding assets selling off. But overall, what we also will be watching for are a couple of interest rate decisions from the European Central Bank, the Bank of England, the Reserve Bank of Australia, and the Bank of Japan. All are expected to remain unchanged. So we will continue to watch for data coming out of the US, and we would probably want to wait to see how the data comes out before building any positions in the markets.